Welcome back to the Alpha Ledger. It is Friday, January 2nd, 2026. Happy New Year, everyone. The markets are open, the volatility is back, and we are starting the year with a massive headache for anyone holding high beta tech stocks. I'm your host, Joe, the guy reading the balance sheets so you don't have to.
And I'm Jane. Happy New Year, Joe. I don't know about a headache, but my portfolio is definitely feeling something. It's wild out there. We just closed the book on 2025, which was the year of the AI IPO, and now we're staring at 2026 wondering if the party is over or if we're just taking a breather.
A breather is a polite way to put it, Jane. If you're holding CoreWeave, you're not breathing, you're hyperventilating. We are seeing a complete divergence in the AI infrastructure trade. For the last 2 years, the narrative was simple. Buy anything that touches a GPU. If it had an NVIDIA chip, the stock went up. NVIDIA, Supermicro, Dell, Vertiv. But now we are in phase 2, the infrastructure phase, and it is getting bloody.
Exactly. That's why I wanted to do this episode today. I keep seeing these 3 tickers trending on X and Reddit: CRWV, IREN, and NBIS. It's like this holy trinity of high-risk, high-reward AI plays. You've got CoreWeave, the golden child of the private equity world that finally went public. You've got Iris Energy, which everyone thought was just a Bitcoin miner, but is now claiming to be an AI cloud giant. And then there's Nebius, which, honestly, 6 months ago, I thought was a typo for a biotech stock.
It's definitely not a biotech stock, though. Their valuation might make you sick if you look too closely. Look, this is the debate of 2026. Who owns the grid? Is it the company that rents the chips, CoreWeave, the company that owns the power plugs, IRIS, or the company that builds the full software stack on top of it, Nebius? Today, we're going to tear these 3 apart because the news flow over the holiday break was insane.
Let's start with the elephant in the room, CoreWeave, ticker CRWV. Joe, this stock was the darling of 2025. They IPO'd in March, the stock shot up to $187 by June. Everyone was calling it the AWS of AI. And now, we are trading around $80. We've lost more than 50% from the highs. What is happening?
Gravity is happening, Jane. Let's look at the facts. CoreWeave is a pure-play GPU cloud provider. They buy thousands of NVIDIA Blackwell GPUs, rack them up, and rent them to OpenAI and Microsoft. Sounds like a money printer, right? And it was. Revenue for the last quarter came in at $1.36 billion, beating estimates. But here is the problem: capital expenditure. To buy those chips, they took on massive debt. And now the market is looking at their balance sheet and getting nervous.
I saw the headlines about insiders selling too. That never looks good.
It looks terrible. We saw Brian Venturo, the CSO, dump nearly 300,000 shares over the holidays. Brandon McBee, the chief development officer, sold over $10 million worth of stock. When the guys who built the company are cashing out at 52-week lows, well, not lows, but on a downtrend, it signals that maybe they think the easy money has been made. The stock is down 16% in just the last 6 trading sessions.
But isn't insider selling normal after a lockup period expires? They IPO'd in March, so we're about 9 months out. Maybe they just want to buy yachts.
Maybe, but you don't sell into a crash if you think the stock is going to $300 next month. The issue with CoreWeave is the commoditization risk. Right now, they have a massive backlog, $55.6 billion in contracted revenue. That sounds huge. But skeptics, like the famous short seller cohorts, are arguing that as Amazon, Google, and Microsoft build their own custom chips, the demand for renting CoreWeave's generic NVIDIA clusters might fade. They are a middleman, and in tech, middlemen get squeezed.
Okay, but Citi is still bullish. I was reading a note from Tyler Rodkey at Citi, and he has a $135 price target. That's like almost double from here. He says the demand is real and the supply constraints are actually keeping prices high. So is this a falling knife or a generational buy opportunity at $80?
It's a leverage play. CoreWeave has a debt-to-equity ratio of over 2.6. That is incredibly high for a tech company. If AI demand hiccups, even for a month, CoreWeave still has to pay the interest on those billions of dollars of debt they use to buy GPUs. That's why the stock is so volatile. If you buy CRW here, you are betting that the AI supercycle has 5 more years of exponential growth. If it flattens, CRWV is in trouble. That's the bear case. All right, so CoreWeave is the high-debt, high-growth play. Let's pivot to the second ticker, IREN, Iris Energy. Now, I remember them as a Bitcoin miner. They mine crypto, but their stock is acting like an AI darling. They just signed a massive deal with Microsoft, right? Right. IREN is the fascinating pivot story of this cycle. They realized about 2 years ago that mining Bitcoin is a low-margin commodity business. But the data centers they built to mine Bitcoin, those are incredibly valuable. Why? Because they have power, massive amounts of grid-connected renewable power. In the AI world of 2026, power is more scarce than the chips themselves.
So they just unplugged the Bitcoin miners and plugged in AI servers?
Essentially, yes. They are retrofitting their sites in Texas and British Columbia, and the market is buying it. They signed a $9.7 billion multi-year contract with Microsoft to provide AI cloud hosting. That is a game changer. It validates their infrastructure. As of their last report in November 2025, their AI cloud revenue is skyrocketing. They are targeting $3.4 billion in annualized recurring revenue, ARR, just from AI by the end of this year.
But the stock is trading at $41. It's way down from its peak of $76. And I saw something scary on Seeking Alpha. Short interest is at 15%. Why is everyone betting against them if they have a $10 billion deal with Microsoft?
Great catch. The short interest is the key here. The bears are betting on dilution. To build these data centers for Microsoft, IREN needs cash, a lot of it. They just closed a $1 billion convertible note offering in October, then another $2.3 billion offering in December. They are printing shares to fund construction. Shareholders are getting diluted. The shorts are betting that IREN will run out of money before they can turn that Microsoft contract into profit.
Ah, the classic death spiral fear. So even though they have the deal, they might wipe out the equity holders paying for the building?
Exactly. However, if they execute, if they get those GPUs running and the cash starts flowing from Microsoft, those shorts are going to get squeezed. 15% short interest is high. If IREN announces they've energized the new Texas site ahead of schedule, this stock could rip back to $60 or $70 in a week. It's a binary bet, execution versus dilution. Also, they still have Bitcoin exposure. If Bitcoin crashes, their legacy business hurts. If Bitcoin rallies to 150K, IREN gets a free cash flow boost.
It feels like IREN is the infrastructure play. You're buying the concrete and the electricity. CoreWeave is the hardware rental play. You're buying the chips. Now, what about the third one? Nebius Group, NBIS. This is the one I know the least about. They are up 200% in the last year. Who are they?
Nebius is the most interesting story of 2026. Technically, they're a spinoff from Yandex, the Google of Russia, but they completely severed ties, incorporated in the Netherlands, and took all the best engineers and AI tech with them. They are a pure-play AI cloud, but unlike CoreWeave, they build their own software stack. They aren't just renting you a bare metal GPU. They have a platform that makes training AI models 20 to 30% more efficient. That's their pitch.
And the market loves them? I see analysts projecting 95% upside from here. That seems insane for a stock already up 200%.
The bullishness comes from their deal pipeline. In late 2025, they announced a $17.4 billion deal with Microsoft and a $3 billion deal with Meta. Combined, that is over $20 billion in backlog. For a company with a market cap around $21 billion, that is a 1-to-1 backlog to market cap ratio almost. Analysts look at that and say, this is mispriced. If they deliver on that backlog, the revenue growth will be astronomical. We're talking 350% year-over-year growth.
Wait, $17 billion with Microsoft? I thought Microsoft was building their own stuff. Why are they signing checks to everyone? They signed with CoreWeave, IREN, and Nebius?
Because Microsoft is panicked, Jane. They cannot build data centers fast enough to satisfy the demand for Copilot and Azure AI. They are renting capacity from everyone. It's a land grab. Microsoft is essentially funding the entire industry's CapEx right now, but Nebius claims to have a full stack advantage. They claim they can deploy clusters faster than CoreWeave because they control the software orchestration layer.
Okay, but what's the catch? There's always a catch. Is it the valuation?
Huge catch: valuation and geopolitics. First, the valuation. NBIS trades at something like 65 times sales. Not earnings, sales. That is priced for perfection. If they miss a quarterly revenue target by 5%, the stock could drop 30%. Second, despite the Dutch HQ, some institutional investors are still wary of the legacy connection to Yandex, even though they've been cleared by US-EU regulators. It adds a complexity discount for some pension funds.
So CoreWeave is the struggling giant, IREN is the volatile power play, and Nebius is the expensive rocket ship. If you had to put fresh money to work today, January 2nd, 2026, where do you look?
Let's break down the scenario bets. Scenario A, the safer bet. If you believe AI is here to stay but want to avoid bankruptcy risk, you probably look at CoreWeave at these depressed levels, $80. Why? Because the bad news is priced in. The insider selling is public. The debt is known. If they just execute normally, the stock likely drifts back up to $100 to $110. It's a mean reversion trade.
Okay, I like mean reversion. Buy the dip. What's scenario B?
Scenario B, the swing trade. That's IREN, if you have a stomach of steel. You are buying it for the short squeeze. With 15% short interest, any positive press release about their Childress, Texas facility could send the shorts scrambling. Plus, you get a free call option on Bitcoin. If crypto rallies in Q1 2026, IREN outperforms everything. But if they announce another dilution round, you could lose 20% overnight.
And Scenario C. Scenario C, the growth at any price. That's Nebius. If you think Nebius is the next Snowflake or Datadog of AI, a software infrastructure play that becomes indispensable, then you don't care about 65x sales. You buy it because you think it's going to be a $100 billion company in 2030. You are betting on the tech moat. Their capacity target of 2.5 gigawatts by the end of 2026 is massive. If they hit that, they are one of the largest players in the world, period.
I'm looking at the charts right now. IREN is actually green today, up about 11%. Nebius is flat. CoreWeave is down another 3%. It feels like the market is rotating into the power plays, IREN, and out of the rental plays, CRW. Does that make sense?
It makes perfect sense. Think about the bottleneck. In 2024, the bottleneck was chips, NVIDIA. In 2025, the bottleneck was capital, getting the money to buy chips. In 2026, the bottleneck is electricity. You can have all the H200 or Blackwell chips you want, but if you can't plug them in, they're paperweights. IREN owns the power capacity. CoreWeave has to find the power capacity. The market is realizing that owning the electron is more valuable than owning the silicon right now.
That's a powerful takeaway. Own the electron. I saw a Reddit thread on r/IREN stocks comparing these three. One user said, NDS is the asymmetric hyperscaler, CRWV is the premium rental, and IREN is the utility company. I kind of like that analogy.
It's decent, but I tweak it. IREN isn't a boring utility. They are a growth utility. Utilities don't grow revenue 350% year over year. IREN reported $240 million in revenue for Q1 FY26. That's huge growth. The risk is just the execution. Building data centers is hard work. Pouring concrete, dealing with local regulators, managing heat dissipation for 100,000 GPUs. It's not just software.
Let's talk about the downside. What breaks the thesis for all three? If I buy a basket of CRWV, IREN, and NBIS, what is my nightmare scenario?
The nightmare is hyperscaler internalization. The risk is that Microsoft, Google, and Meta eventually say, thanks for the help, but we're done renting. If Microsoft builds enough of its own Maya chips and its own nuclear-powered data centers, they might not renew that $9.7 billion contract with IREN or the $17 billion deal with Nebius. These contracts have terms, but if the big guys bring everything in-house in 2028 or 2029, these stocks are zeros, or at least they become penny stocks.
But that's years away, right? The backlog seems solid for now.
Yes, the backlog gives you visibility for 24 to 36 months. That's why the trade is working now, but markets look forward. If we see signs of AI demand cooling, like if ChatGPT user numbers drop or Copilot adoption slows, these infrastructure stocks will get hit the hardest. They are the picks and shovels, and if the gold rush ends, nobody buys shovels.
Okay, final segment. Let's do a quick fire round on the specific recent news items because there were some interesting filings.
Hit me.
CoreWeave, the Renaissance Capital filing. They increased their stake by 50% in Q3. So while insiders are selling, the institutional funds are buying?
Classic divergence. Insiders want liquidity, institutions want exposure. Renaissance Capital is a smart shop. They likely see the 50% drop as an overreaction. When the smart money buys the dip while retail is panic selling, that's usually a bottoming signal. It supports the $80 support level thesis.
IREN, the convertible notes. They issued $1 billion at 0% interest? How is that possible? Free money?
It's not free. It's a convertible bond. The interest rate is 0%, but the investors have the right to convert that debt into stock at a premium, around $85 per share. Essentially, investors are saying, we don't need interest payments. We just want the option to own your stock if it doubles. It shows massive institutional demand for IREN equity, even if it dilutes current holders. It's bullish for the long term, bearish for the short term due to dilution fears.
Nebius, the power target increase. They bumped their 2026 target from 1 gigawatt to 2.5 gigawatts. That's more than doubling their capacity goal in just a few months.
That is the most aggressive expansion plan in the industry. Going from 0 to 2.5 gigawatts in 2 years is unheard of. For context, a nuclear power plant is about 1 gigawatt. They are trying to secure 2.5 nuclear plants worth of power. If they pull that off, the stock is cheap. If they fail, and securing power is incredibly difficult right now, the stock collapses. It's the ultimate execution risk.
So to wrap this up for our listeners who are staring at their brokerage accounts, you've got CRWV at $80, IREN at $41, NBIS at $89. If you want the value play, CoreWeave. If you want the power/short squeeze play, IREN. If you want the hyper-growth software play, Nebius. Did I get that right?
You nailed it. And remember, position sizing is everything. These are not Coca-Cola or Johnson & Johnson. These are stocks that can move 20% in a day. Don't bet the mortgage on them. But if you believe in the AI build-out continuing through 2026, you probably need exposure to at least one of them.
I think I'm leaning toward IREN. I like the idea of owning the power. Plus, if Bitcoin rallies, it's a nice bonus. But that insider selling on CoreWeave, that still spooks me.
Whatever you choose, watch the earnings dates. CoreWeave reports again in mid-February. IREN just reported in November, so they are quiet for a bit. Nebius will have updates soon. We'll be watching it all. Thanks for tuning in to the Alpha Ledger.
Don't forget to like and subscribe. And let us know in the comments. Are you Team CoreWeave, Team Iris, or Team Nebius? See you next time.